Welcome to the Trendline Gala podcast. So, if the world of finance feels a bit like a secret language you never learned,
Yeah, it's
perhaps
so
full of
fun.
complicated jargon and, these big words like volatility or derivative,
Words that are meant to sound scary, I think.
right, then this is for you. We are going back to the absolute basics today. Our mission is, well, it's simple. Let's define those keywords so you can feel confident when the market comes up.
And that's so important because it's easy to get overwhelmed. I mean, the finance world often sounds like it's deliberately trying to confuse people.
It really does.
But the core ideas behind trading are actually, they're super simple. We're going to walk through this step by step, starting right at the beginning, like what a trade even is.
Exactly. We have to ground this in something real first. That way, when we start talking about stocks and bonds, the idea itself already makes perfect sense.
Okay, let's do it. Let's demystify this.
All right, so let's break this down. At its most basic level, a trade is just swapping something you own for something you want more.
A voluntary swap.
A voluntary swap. Most beginner guides explain that a transaction only happens if both people think they're getting a good deal.
Okay, so you mean this isn't some complex Wall Street invention? This is what we did as kids, right?
That's it.
Like trading cards in the schoolyard.
Yeah.
Or, swapping a bag of chips for a candy bar at lunch.
That's the perfect example. That simple swap where both sides think they win. That's the definition of a trade. You wanted the candy bar more than the chips. Your friend wanted the chips more.
We both walked away happy.
You both walked away happy. And the person doing that swapping, whether it's for snacks or for, millions of dollars, is called the trader.
Ah, okay. First key word.
Right. The goal is always the same. Get something you value more.
Okay, now let's connect that to the big leagues. We're moving from chips and candy to money.
Exactly. Instead of snacks, adults are trading money for what we call financial assets.
Wait, what kinds of assets are we talking about here?
Good question. Most guides list a few common ones. The one everyone knows is stocks. A stock is just a tiny, tiny piece of a company. When you buy a stock, you're becoming a part owner, and you're hoping your piece becomes worth more later.
So you're betting on the company to do well.
You're betting on the company. Then you have bonds, which are completely different. A bond is more like a loan that you make to a government or a big company.
A loan.
Yeah. You give them money now, and they promise to pay you back later with interest.
Okay, so stocks are ownership, bonds are debt. That's a helpful way to think about it.
It is. And then you hear about other things like crypto.
Digital coins.
Right. Or you might see things called ETFs or funds. These are basically big baskets with lots of different investments all bundled together.
So you're not just buying one company, you're buying a little piece of a lot of them.
A little piece of a lot of them. It's a way to spread things out. And all this buying and selling of stocks, bonds, all these assets, it has to happen somewhere.
Right.
That somewhere, that whole system, which is mostly online now, is what people call the market.
So the stock market is just the place where stocks are traded.
That's all it is. And the commodities market is where things like gold or oil or even coffee are traded. It's just a name for the place.
Got it. It's like a huge global flea market almost.
That's a great way to put it. And every single trade in that flea market needs two people.
A buyer and a seller.
A buyer and a seller. And the relationship between those two is what decides the price.
Okay, let's look closer at this part. How does supply and demand actually set the price for something?
Well, the core principle is, it's just that. It's supply and demand.
Okay.
So when there are way more buyers who want something than there are sellers willing to sell it.
So high demand, low supply.
High demand, low supply. The price tends to go up. People are willing to pay more to get it.
Because it's scarce.
Exactly. And if you flip that, if there are tons of sellers all trying to get rid of something, but hardly anyone wants to buy it,
The price has to drop.
the price falls. It has to. It drops until it gets cheap enough that someone finally says, okay, for that price, I'll buy it.
So the price of a stock isn't some magic number. It's just what people are willing to pay for it right this second.
That's all it is. It's a constant, real-time negotiation. Which brings us to the big question. Why do traders even bother?
To make money.
To make a profit.
Right.
That's the main goal. You're trying to buy something at one price,
Buy low.
and then later sell it at a higher price.
To high.
Let's use a super simple example. Say a trader buys a stock for $10 and then sells it later for $13.
That made $3.
They made a $3 profit before any fees or taxes. That's the whole game.
But what happens if the price goes down instead? Is that a loss?
That's right. And that's the other side of the coin. If you buy at $10 and the price drops to $6, if you sell then, you take a loss.
Ouch.
Yeah. And here's what we know. Trading is never, ever a sure thing. This leads us to probably the most important word of all, risk.
Okay.
When you trade, you are putting money on your guess about which way the price will move. And because prices can bounce all over the place,
Right, that's that volatility word people use.
that is volatility. It just means how much and how fast a price is changing. Because of that volatility, trading always involves the risk of losing some or even all of the money you put in.
So understanding the risk and how much you're willing to lose seems like step one, before you even think about profit.
It is the absolute foundation. So what does this all mean when we put it together? We've learned that trading is really just buying and selling assets.
Yes, the goal of making a profit.
Right. And it's all driven by supply and demand, but it's always, always balanced by risk.
That makes a lot more sense.
If you're a beginner and want to learn more about trading, you can take our free beginner trading quizzes at trendlinegala.com. Next time, we'll break down the difference between trading and investing so you know which one actually fits you. Thanks for joining us at Trendline Gala.